Guys, this is a very special video because I am bringing to you a loan product and a lender who may address a very difficult problem that I see recurring over and over again, and it is loans for traveling nurses, people who work different hours and they work for different companies, resulting in different multiple 1099s and irregular income levels through the year. I have struggled with loans for these type of traveling professionals until recently I got introduced to Arin. So Arin, go ahead and introduce yourself and tell us about the product that you think could solve that problem.
Absolutely. Yeah. So my name's Arin Baghermian. I'm the president of United Trust Mortgage. And the product that we're going to talk about today is going to be the P&L-only loan, as well as the written verification of employment loan, depending on how you get paid as a traveling nurse. So I've seen situations where traveling nurses get paid 10 on a 1099. They work for multiple companies throughout the year. They make consistent income, but due to the shift in employers, so to speak, the underwriter with traditional lenders is unable to go ahead and check off what's called a stability box, aka, do you have stable employment? And when they're unable to make that determination, they unfortunately cannot use your income as stable and consistent income. So the solution to that is to utilize what's called the profit and loss loan, because as a traveling nurse who gets paid on a 1099, you're technically a sole proprietor if, let's say, you're getting paid as an individual. So you're essentially a business owner, and the profit and loss loan will ultimately just analyze your income for that year or maybe 2 years and divide it by that period of time. Right. So there's no need for tax returns. There's no need for bank statements. There's no need for the 1099s. We just solely look at a P&L that's prepared by a tax professional and utilize that as qualifying income. A couple of caveats is that you would have to own at least 25% of the business, which is typically the case if you're a traveling nurse. You must be in the same business for at least 1 year and have at least 2 years of experience in the same industry. So a couple of requirements as far as the P&L product goes. Again, the P&L must be prepared by a qualified professional, such as a CPA, a IRS enrolled agent, a CTEC if you're in California, a PTIN holder, or a tax attorney. Any one of these qualify. We'll be covering the most recent 12 to 24 months, and it must be signed and dated by the tax professional. Couple features in regards to the P&L only loan. We have a max loan to value of 80%. So if you're purchasing a property, you're looking at 20% down. This is available on owner occupied properties, non-owner occupied, and second homes. Minimum FICO requirement is 680 with loan amounts up to $4 million. The income calculation, again, is pretty straightforward. We just take the net income on the P&L and divide it by the specific time period. We go ahead and take that number, multiply it by the borrower's ownership percentage, and there's certain things that will add back, such as depreciation, depletion, and amortization. Reason why is because those aren't true costs. That's not money coming out of your pocket, right? Industry standards will apply. So gross receipts must be, and I'm sorry, gross receipts and expenses must be reasonable for the industry. Now, as a traveling nurse, I would only imagine that you don't come across significant expenses. So this doesn't really apply in that situation. So we're not going to dive a little bit too deep into what the different caveats are in that scenario. Oops, I went backwards there. Okay. So over to the P&L only loan versus the standard P&L loan. So the standard P&L loan will require for you to provide additional documentation such as tax returns, bank statements, your 1099s, and it just opens up the door for a little bit more scrutiny. But the benefit is that you can come with less money down, so 15% minimum, and it gives you a slightly favorable interest rate. But if, let's say, you were already planning on putting 20% down, in my opinion, the slight improvement in rate isn't really worth the risk of scrutiny with an underwriter, given the amount of extra documents that we'll have to go ahead and send over. One of my mottos is less is more. The less information you provide to the underwriter, the less they're going to question the information. Next will be the bank statement loan. So again, this is utilized for individuals that are considered self-employed. Again, no need for tax returns, no need for tax transcripts. Same concept as the P&L loan, where you have to own at least 25% of the business, be in that same business for at least a year, and in the same industry for 2 years. This is typically a non-issue for traveling nurses because 9 out of 10 times you're structuring your income as a sole proprietor, and you're typically in that same business, same line of work. You're not really bouncing around. This is more related to someone who, let's say, is a contractor and then decides to go ahead and open up a grocery store. You know, bank statement loans allow for up to 90% loan to value, so minimum 10% down on purchases. And again, it's available for cash outs as well as rate and term refinances. A little more lenient as far as the FICO score goes. We can go as low as 640 and loan amounts up to $4 million. The way we calculate income with a bank statement loan is that we'll go ahead and add up your deposits for the last 12 months, multiply it by a 50% expense factor, and average that figure out for that 1 year period. Now, again, as a traveling nurse, you're not coming across significant expenses. The way I see it is 50% is pretty steep as far as an expense factor goes for a traveling nurse. So that being said, what we can do is decrease that factor using a CPA letter. So your CPA or tax professional will ultimately provide us with a lender indicating what your what your expense factor actually is. So the lesser the expense factor, the higher your qualifying income. So P&L only loan versus the bank statement loan. You'd want to go ahead and utilize the profit and loss loan if you have irregularities in your deposits. Let's say there's a lot of fluctuation in cash flow that may open up the door to scrutiny with the underwriter. Again, less is more when it comes to underwriting. So that's where the P&L product would be a lot more suitable for the client. And again, as a traveling nurse, you're probably not coming across significant fluctuations in your income unless if you're planning on utilizing that income to pay for some sort of investment that's going to allow you to scale your business. In that case, the bank statement loan will come into play because what we'll do, the benefit with that is the fact that we can go ahead and demonstrate consistent cash flow, even if you're not profitable. So if the P&L shows limited or negative net income, the bank statement loan will allow us to still go based off of your deposits and utilize that standard 50% expense ratio. Bank statement loans are typically a little bit more relaxed when it comes to credit and financial documentation requirements. And again, a good choice if you don't want to go ahead and show the P&Ls, the tax returns, or if you have any sort of large expenses coming up that will appear on the P&L and reduce your overall net income. Written verification of employment programs would be for traveling nurses who are W-2'd. And this is a great program because as a traveling nurse, you come across a lot of variability in your income. 1 week you may work just a few hours, and next week maybe you're working 60, 70 hours. You're getting a lot of overtime income. And once we have these variable income sources come into play, such as overtime, bonus, commission, things of that nature, or in your case, shift differentials. Let's say you're working a graveyard shift, you're going to get paid more for that shift, right? This would be great if, let's say, the underwriter is unable to, again, check off that reliability and stability box with your income. If you're unable to, let's say, for example, demonstrate that variable income for a period of 2 years, the underwriter isn't going to be able to use it with your traditional loan products. However, with the written verification of employment program, we go ahead and send the document to your employer. They fill it out based off of what you actually receive, and we utilize that as qualifying income. So no need for pay stubs, W-2s, or tax returns. We also have the FHA written verification of employment program. Same concept with this program. The only difference is that we can go up to 96.5% loan to value, meaning that you can come in with as little as 3.5% down. But the loan amount is limited to the county loan limit, which we're looking at about $524,000. So we don't have much flexibility to go any higher than that loan amount. So it does limit your borrowing ability. Now, in this case as well, you do have to be with your same employer for a minimum of 2 years. And this is going to apply to both written verification of employment programs.
And that's for W-2 workers.
That's for W-2 workers specifically, correct. Now, if you do need a CPA contact, you're more than welcome to reach out to my colleague and my brother-in-law at Tri-County Financial Services, Emin Hartunian. You could reach him at 818-523-1664, or go ahead and email him at ehartunian25@gmail.com. If you have any more questions, you're more than welcome to go ahead and reach out to me or reach out to Elena for a warm introduction. Thank you so much.
I actually do have a question on this one. On
Yeah.
the P&L on the P&L loan, the pure P&L, it says 80% loan to value. Will it allow seller in a second position?
Seller in a second position. The overall combined loan to value max is going to be 80%.
Right. So this person will need to come up with 20% regardless, right? Even
Yeah.
though the seller is willing to come in a second position.
That's a really good question. That's a very unique scenario. I would have to run it by some investors and find out as to whether or not there's a product that would fit. Purchase money seconds are common in this industry. I'm just not 100% certain if it would be allowed on the P&L only product. I doubt it off the top of my head, but that's not to say that there's someone out there that's unwilling to do it. And in certain cases, we can always request an exception. So if we're in a situation where the seller's willing to work with the borrower and give us a shot to submit it to underwriting and request the exception before contingencies are over, we're always happy to do that. It's just upfront, it's no guarantee. We have a little bit of uncertainty until we actually go ahead and get the file over to underwriting.
Gotcha. That was the only question that I had. Okay,
Awesome.
thank you so much, guys. If you need further information, if you know somebody who's a traveling nurse who's trying to apply for a house, please forward this video to them because definitely that could save them several years worth of renting and wasting money on rent. Nobody wants that, right? So thank you so much, Arin. I'll talk to
My
you
pleasure.
soon. I will definitely be reaching out to you with some very unique clients. I have a feeling that you'll be able to help me out with them. And until then, I will see you